Good morning. It's time for another PulseWave report with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that you can see available at PulseWaveTrading.com. You don't want to miss out on what's going on in these markets. Learn how to break bread with us. Build a income stream for yourself. All right, so first things first, Bitcoin is doing exactly what I told you it was going to do during our last couple of end of day reports. And yes, Bitcoin is now back above 40,000. And this may be the last little push before the correction, another pullback down, testing those support zones. Remember, you got two major support zones. Your first support zone is going to be around that 35,000 to 30,000. Then your next one, this is a key support, that's at 22,000 to 20,000. Those are key support zones. Okay, the first one is way wider because it has to build a stronger, longer base to get you to 50,000, because 50,000 is the next upward target. All right, so that's where we are right now. So those stocks that seem to benefit and move with Bitcoin are doing that today. You got Riot up almost $4. Mara, M-A-R-A, is up $2.53, and MGTI is up now 2 cents at 23.5 cents a share right now. And MGTI has been on fire. It rallied from 2 cents up to 29.5 cents. So, man, Pulse Waves nailed that one too, man. I tell you, man, I don't know how anybody trades or navigates these markets without these pulse waves. I don't care if you're, managing your 401k or your Roth IRA. I don't know how you can do any type of market investing or trading without the pulse waves. It just doesn't make any sense. All right, so the initial jobless claims, as you know, came out today. And yes, claims have soared to the highest level since August, ladies and gentlemen. Despite the ongoing government enforced lockdowns and small business closures across the country, analysts expected the number of Americans seeking first time unemployment benefits to remain flat in the first week of 2021, even after ADP and BLS showed big, huge, enormous job losses. But they were surprised when the initial claims exploded higher. 965,000 Americans filed for first time jobless claims in the first week of 2021, which is a massive jump from the last week's 784,000 and well above expectations of 789,000 rise. Now, for those of you that are thinking, man, 965,000 jobs, that ain't nothing. So you don't think 900, almost a million Americans filing for unemployment mean they don't have a job is nothing. Okay, well, to give you a little idea, if you're having a really difficult time wrapping your head around this, 965,000 people file for unemployment claims, because that means that 965,000 people are out of work. Again, you're saying, still doesn't mean much to me. Well, let's put it another way. How would you like to receive 965,000 blows to the chest from Iron Mike Tyson? I didn't think so. So to say that 965,000 is not a lot, oh, it's a lot. How would you like to have to tread water and 965,000 gallons of water? And you have to tread water for 3 days? You would drown. 965,000 is a ginormous number no matter how you look at it. How would you like to receive 965,000 venomous snake bites? Or 965,000 scorpion stings? Or 965,000 African bee stings? You wouldn't. No one would want to see that. That's too big of a number. I rest my case. This is problematic for any government. I don't care if Trump was to remain in office. I don't care if Biden, I don't care who is in office. That is a ginormous number. I don't think Reagan could do nothing about that. That's right. I don't think he could. I do not think he could. I don't think that if Kennedy were alive today, I don't think he could turn this around. This is a ginormous number. There's likely plenty of seasonality issues with this data, but we don't know that for sure. But we do know that some extreme swings in the Illinois data. Remember, last week saw a massive outlier drop in Illinois. And now this week, Illinois is at the top, seeing over 50,000 initial claims. There's something not right with that data. What's going on out there in Illinois? Now, continuing claims rose for the first time since Thanksgiving week. Of course, this is all irrelevant given tonight's economic address by Biden, which will save everyone with trillions of free money for doing absolutely nothing. So that's what everybody's excited and hoping for, and that's why the stock indices are up slightly this morning, because everybody is optimistic that they will fly those helicopters and throw money out. But there's another perspective in all of this. Let's now turn to your boy Peter Schiff. He believes that the commodity boom isn't about economic growth at all, but that it's about inflation. Is he right? Again, remember, Peter Schiff has a pretty good track record in being right about a lot of different things. He's gathered a lot of hate on CNBC because he has pretty much embarrassed their hosts and other guests on multiple occasions, but he's not alone in that. All right, Reggie Middleton has done the same. He also embarrassed the talking heads along with their guests on multiple occasions. That's why you ain't seen him back in a hot minute. Now, commodities are booming. I've been going over that with you. I've been letting you know that we got beans in the teens. All right, soybeans are they hit the 1,400 handle. Okay, that's where we are. We're at that $14 handle. Corn is very, very powerful right now at the $5 handle, and wheat is closing in on getting close to the $7 handle. Corn stayed at like the $2 level forever. Then it hit 3, and everybody's like, ooh, is this the beginning for corn? And it stayed at 3 forever. And then after that, it moved and it went to 4, and everybody's like, wow, this is amazing. It's so spiritual. But now corn is at 5.30, and people are about to faint and pass out because they can't believe it. Yeah, I would have thought corn would have been a lot higher years ago when they started burning our food for fuel. Does the word ethanol ring a bell? Well, most of the investment world continues to focus on the stock market, and they're not really paying much attention to what's going on in the commodities market. And as Peter put it, that's going to have a big impact on what happens in the supermarket. Now, I must give credit where credit is due. There is another famous individual who we have much love and respect for, and that's your boy Jim Rogers. He's been saying this for over a decade now, that the new king in town is going to be the farmer. All right, because we may find ourselves in a situation where you won't be able to find food at any price. Forget high prices. What about not being able to find it at any price? What if you are the richest man on the planet and you're ready to buy whatever your family needs as far as foodstuffs, and you get to the store And yeah, tomatoes is $10,000 per tomato. A head of lettuce is $100,000. And forget wheat and corn and soybean. Anything that has that in it is $1,000,000. So that's like the majority of the population priced out of the market. But then when you get to the store, those prices are still up there. So you got sticker shock. But then you look and there's nothing in the bin. Yes, if we had tomatoes, I could sell you one for $10,000. Yes, if I had a head of lettuce, I could sell it to you for $100,000. Yes, if I had corn or wheat or soy, I could sell it to you for $1,000,000, but I don't have any more. I'm all out. That's what the grocer says to you. And you're saying, look, man, I will give you $10 million right now if you can just go in the back and locate me, these things on my grocery list. I'll give you $10 million right now. And he's looking at you and saying, sir, 20, 30 years ago, I would have took you up on that offer because $10 million was a lot of money. But today, $10 million, sir, is only like $100. That's hyperinflation. That's what Mr. Schiff is concerned about. So agricultural commodities in particular, yes, they are still on fire. We're seeing 5-year highs on many commodities. Corn was up 5% on Wednesday, January the 13th. Wheat was up 4.73%. Oats and rice were up over 2%. I forgot all about oats and rice. Yeah, man. Yeah. It's not just agricultural commodities charting big price increases. Industrial metals are also up. However, they're well off their 52-week highs. Copper was up 2.13% on Wednesday and hit a 5-year high. Now, when I said metals, I'm referring to gold and silver. They're off their 52-week highs. What's driving prices for industrial metals, for agricultural commodities? It's not strong economic growth. He's right. We're not having record growth. Nope. In fact, we still have the planned scamdemic. What's driving commodity prices higher is the record growth in money supply. The Fed is cranking out money like it's going out of style. In fact, the money supply grew at record levels in 2020. Historically, the growth in the money supply has never been higher, with the 1970s being the only period that even comes close. The Federal Reserve is printing money to monetize the record U.S. budget deficits. And it's also expanding the money supply in order to keep interest rates from rising. Steady manipulation of the bond market, ladies and gentlemen. While yields on U.S. Treasury bonds remain relatively low, interest rates have spiked significantly from their lows last spring, and the trend is clearly up. This stands to reason given the huge numbers of bonds the U.S. Treasury is issuing to fund the borrowing and spending. And I have to tell you, when you look at the bond futures and you look at the bond ETF, TOT, the bond prices are falling through the floor, ladies and gentlemen. When that happens, yields spike. But through magical mathematics, the Fed is keeping those interest rates as low as possible, not allowing the yields to move higher. That is what you call blatant manipulation. Because if you allow the markets to be the markets, then the interest rates will be going up sharply right now, but they're just not doing that. They're not doing it. So since we have such a historically large amount of debt, we can't handle historically normal interest rates. No, we can't. Now, Mr. Schiff pointed out that we could easily see the yield on the 30-year Treasury quickly move from 2% to 4%. That would be a large move, but 4% remains low in historic terms. And he's right. So the yields are moving incrementally, but they're really microscopic. So they're not even really a factor when you put it into historic perspective. So they're not really allowing interest rates to move like they would be in a situation like this. But mark my words, if these bond prices fall any lower, they're going to start losing the ability to do that. They're no longer going to be able to keep interest rates artificially low like this. They just won't. because once you hit a certain price inflection point in the bonds, that's game over. That will be game over. You heard it here first. What would make me say that that is the case? Well, I have to tell you, it would be in the long bond. It would be in that 30-year. There was a time, ladies and gentlemen, during my tenure that bond prices were below par. They were below par. I remember when I came into the game doing Wall Street thing, bond prices were below par. For those that don't know what par is 100. Okay. When you are below 100, you are considered subpar. Okay. When you are above 100, you are now trading at or above par, right? If you're at 100, you're at par. If you're above it, you're over par. You're par. So right now, bonds are, and as far as price is concerned, they're historically very high. Bond prices are, and that was done in order to have wiggle room and breathing room and time in order to do this. Picture it like a long-term put option, because if you allow the prices to go up really high to almost near 200, then that gives you a lot of time before the prices fall and drop below par. Because as long as prices remain above par, and really technically are I want to say above 120. Once you got bonds above 120, that's your environment for, low interest rates, okay? But once the bond price drops below that 120 threshold, now you're in danger of falling below par, because it's just a hop, skip, and a jump to fall below par when your bonds are trading at 120. So once that happens, ladies and gentlemen, they lose control. The Fed cannot keep the rates artificially low anymore. The only reason and the only way they've been able to keep interest rates this artificially low is by market manipulation. But when you say market manipulation, let's explain what that means. What that means is they're keeping the bond market price, keeping those bond futures floating higher. You got to keep them floating in midair, because if you let the air out, bond prices drop below par, and now you got rampant inflation. Now you got interest rates rivaling that of the 1970s and 80s, when you're at 20 and 22%. And that's if you had good credit. That's what they don't want to happen, because the economy cannot sustain that. Okay? Now, keep in mind, it hasn't been until recently that the government was able to borrow for 30 years at 4%. Getting that 30-year rate down to 4% took some doing, okay? Now, that is a historically low cost of debt. But again, your cost of borrowing should commensurate with your risk and how much you've already borrowed. So given the fact that we have so much more debt now than we had in the past, America is a worse credit risk now than it was in the past, not necessarily a risk of default, because as long as we have a printing press, we don't have to default. The risk is inflation, though. The risk is that we print a bunch of money because we owe so much debt. We can't raise taxes on the population to cover the debt, so we have to print money, which is exactly what we are doing. Which is why commodity prices are rising, and that's why bond prices are falling. That's why the dollar is falling, okay? So why aren't we seeing a big rise in the price of gold and silver? That is the million-dollar question. Why not? Just like on Friday, when he was like, I was getting attacked by Santa Claus, and they didn't do nothing. He said, yeah, but he could have did something. He didn't do nothing. And they said, why, Craig? Why he didn't do nothing? And that's what's saying to the Fed right now. Why, Fed? But why isn't the price of gold and silver rising? I don't get that. That's a hedge against inflation. Why isn't it rising? Why, Fed? Peter said he thinks it's because investors believe the Fed will ultimately fight inflation, and rising interest rates will be bad for precious metals. Of course, that's not going to happen. The rising stock market also makes investors less inclined to hedge their portfolios of gold and silver. Now, that is a good point, but we have seen a breakdown of market correlations, and as we know, we got to keep it 100. We know that correlation does not necessarily equal causation. So in a situation like this, here's the real skin. If you want to dig a little bit deeper, we gotta dig a little deeper, pull back a couple of more layers. In a perfect world, that would be true. When the stock market is up, bond prices fall, gold and silver fall, right? Because then gold and silver acts more like a currency in that regard, and so people don't need that. When the stock market is on fire, people want to put their money behind stocks. They want that quick money. They want that fast money, right? But when the stock market is in a bear market, when prices are falling, that's when they take their money out of the stock market and put it somewhere safe-ish. There's no such thing as safe-ish, such as bonds, gold, and silver, which will be a hedge against inflation, right? That's what historically will be done. You could set your watch by it. We used to literally, you didn't need a chart. You didn't need an algorithm. You didn't need a system. You didn't need anything. All you would have to do, if you see the stock market up, just go ahead and start shorting bonds and shorting gold and silver, and you'll be all right. Just place a market order. Sell right now. I don't need a chart. I don't need anything. I don't need any fundamental analysis, no econometric modeling, no fancy algorithms, no tea leaves, no stochastics, no oscillators, no MACD, nothing. Oh, the Dow is down 100 points. Sell bonds. Market order. Sell bonds right now. I don't care what the price is. Sell it. Sell gold and silver. And vice versa. When the stock market was high, oh, short me some bonds. Short me some gold and silver. Oh, the Dow's down 1,000 points. Oh, buy me gold and silver right now at the market. I don't care what the price is. Buy me some bonds right now. No more, ladies and gentlemen. Can you do that? That does not exist anymore. There has been a mammoth breakdown in these markets. The markets have become so broken, so many times intervened, that they are now suffering hangover from over manipulation. All right, so let's qualify that and quantify that a little bit for those that are unaware of what I'm saying. Okay, so the markets are managed. Okay, there's a difference between managed and manipulation. When you are managing something, you're just making sure that everything is secure, that economic terrorism can't take place. You make sure no one can corner a commodity market. You're making sure there's no stock manipulation going on. You just want the markets to be natural and let nature take its course. You don't really intervene. You don't do anything. You let the market do what it's going to do. If what is happening is organic, if everybody and their mother just decided, you know what, today we love McDonald's. Not only do we love their food, but we love their stock. And everybody and their mother is buying up McDonald's, and McDonald's is on fire. It closes up $20 on the day, and everyone's like, woo-wee. Should the Fed come in and intervene? No, not at all, because that is an organic situation that happened. Or, oh, the Dow is down 1,000 points. Why is the Dow down 1,000 points? Is it some big money doing it? Is it some big old program? Nope. Everybody and their mother that you talk to on the street is selling. They want out of their stocks. Is anyone shorting the market? No, no one's. As a matter of fact, if you look at the volume of shorts, it really is almost pretty nil. It's just people want out of their stocks. Should the Fed intervene? Absolutely not. That is an organic happening. You don't need to shore up anything because nothing is wrong. But now if people start shorting on top of that, and now the market drops from 1,000 to 5,000 points, okay, why are people shorting? Is anything nefarious happening? Have you noticed anything, any malfeasance? Is this happening to one particular stock, or is there anything wrong? No, it's organic. You know what you're supposed to do? Nothing. Let it happen. And the reason why you do that is because it is organic happening. You don't have to do anything. You let it happen. But because we live in an interventionist society, the Fed intervenes almost at every turn. Oh no, we can't have the Dow down that much. We need to reassure confidence. But if the people have lost confidence, you're not going to be able to reassure it. You just won't. You may be able to get the Dow to stop falling for a few minutes or whatever, but you're not going to change people's overall perspective and minds about what they're doing with their money. So should the Fed intervene? No. No. Now, when 9/11 happened, the Fed intervened, and that was a good call. That was a right call. All right, because that was not an organic falling of prices. That was precipitated by an act of extreme terrorism. So in a situation like that, should the Fed intervene? Absolutely. Should the Fed close the markets? Absolutely. Should the Fed reassure investors and give people hope? Absolutely. That's the type of intervention that is called for under market management. That's what I mean when I say management. Markets have always been managed. Don't ever get that twisted. They've always, even in a free market, you still have to have some management, because in a situation like that, do you just step aside and do nothing? You allow terrorism to happen, and you allow them to destroy your country and your economy. Talking about free market? No, I gotta let the free market. No. See, that's stupidity, and that is thrown out the window. So there has to be some level of management, and there has to be some level of intervention where necessary, because we live in a fallen world, and there's always someone, some entity, some individuals that want to destroy, they want to, kill, steal, and destroy, and that has to be managed. Also, because mankind is sinful, there's always going to be someone that thinks they can corner a market or take over a company, and they figure if they could just raid the stock real quick, it could put pressure on the company, whatever. That should not be allowed to happen. I agree with that. There should be some intervention at that point. That's why if you notice certain things happening in a stock from day to day, and you're here, shares have halted in Acme because the CEO was caught, stealing a candy bar outside of Walmart. Shares are down. All right. Should the stock close for that? No. But if it's, oh no, the shares are down sharply at Acme. Why? Because it's a hostile takeover. So-and-so, the billionaire who likes to raid companies, is actively raiding this particular Acme today. Says that he wants to drive the stock to as close to zero as possible so that he could buy the company and take over and own all the shares and all this other stuff that goes with that. Should there be intervention at that point? Absolutely. That ain't right. So to some degree, to some point, Fed does need to manage and intervene. But that's not what we have been seeing in the bond market. Oh no, we've been seeing something else. What have we been seeing? We've been seeing manipulation. See, that's the difference. Manipulation is when you try to force a particular outcome that goes against the natural organic course of business. So instead of letting the bond prices do what they're supposed to do based on supply and demand, based on buyers and sellers, no, the Fed has been the chief buyer, propping up bond prices, not letting them drop to that 120 mark we talked about. Because if they drop to that 120, now you're at DEFCON 5. If they drop below par, you're now in DEFCON 1. They can't have that. So in order for them to do what they do with these rates, just got to keep the bond prices at a certain level, and that's what's been happening. So now you understand the difference between a free market and a not free market. And what we have here, when it comes to the bond market, we don't have no free market. And yes, that spills over to gold and silver, because bonds, gold and silver are in the same family, flight to quality, right? So meanwhile, while they have been keeping the bond prices artificially high, they have been keeping and artificially suppressing the price of gold and silver. This is not a conspiracy theory. This is actual documented fact, because not long ago, and you can look this up yourself, several firms were guilty and found to be manipulating the gold and silver markets for at least a decade or more. And people were charged. Penalties were levied. All right. So all these years, people have been telling you about the manipulation of the gold and silver market, have been telling you the truth. Yeah. Deutsche Bank got its wrist slapped. So did JP Morgan and Goldman Sachs. Yeah, man. Fact. The conspiracy theory turned out to be conspiracy fact. So before you go knocking the conspiracy theory, you need to look into it to see if there's any fact or truth to it, or if there's any shred of evidence whatsoever. Evidence admissible in a court of law, that is. And if you have it, then you got it. You got to deal with it, okay? So what do? We know that stock portfolios are going up for the same reason that commodity prices are going up. It is inflation. Now, as Peter Schiff pointed out, that oil is over $53 a barrel. Oil prices are not going to stop going up. And again, it is not economic growth that is driving this oil train. It is inflation. It is money supply growth. It is the Fed and other central banks that are debasing fiat currencies. And so you need more currency to buy oil, or to buy copper, or to buy wheat. Any of these commodity prices that are going up, it's a reflection of the value of paper money going down. Not to mention, talking about the oil market, don't forget, it's the most gangster market on the planet. And they showed you just how manipulated it is when they allowed the crude oil price to go negative $100 a barrel. No one went to jail. No one was brought up on charges. No one was arrested, and we've had no investigation. That should tell you exactly who's really in charge, and it's not who you think it is. Now, Peter said we are heading for an inflationary holocaust. It's going to be a death spiral of inflation, where the more inflation we get, the more inflation the Fed is forced to create. That is a devastating outlook, and I really hope that this one time, just one time, be wrong, Peter. Unfortunately, his economic skills are pretty dope. Trading skills, not so much, but his as an economist, he's pretty on point. As a trader, not so much, but definitely he's a great economist. If he could somehow become a good trader with that too, yeah, he would be a dangerous man. Peter Schiff, if you're listening to this broadcast, come holler at your boy, man. You need these pulse waves in your life. I think that'll help you out a lot, my man. Come get these pulse waves, man. Stop playing. Stop playing around. Get Euro Pacific Capital up and running, man. So with all this talk of inflation, what is the response? You would expect there would be a response, right? If food is going to become unaffordable, I know. Why don't we all just eat Play-Doh? Let's eat fake food. Soylent Green. Well, it appears to be Taco Bell's unconventional answer to McDonald's bringing back the crispy chicken sandwich. The Mexican-inspired fast food giant has introduced several popular vegetarian options, including a partnership with Beyond Meat that it hopes will entice more millennial and Generation Z customers. The Yum brand's own chain is resurrecting its popular potatoes dishes while also testing a menu item with a Beyond Meat substitute after last year's menu cuts left many customers seriously disappointed. The company wouldn't say what the changes are exactly. I would say that it's going to be unique to the things that you've seen elsewhere, so we're definitely going to put our Taco Bell innovation and spin on it, said Liz Matthews, Taco Bell's global chief food coordinator. Taco Bell imposed the cuts during the beginning of the scam pandemic to try to save on ingredients and manpower. The decision to cut the Mexican pizza, a favorite among vegetarians, led to a serious backlash against the brand. News of the collaboration sent Beyond Meat shares surging 4% in a single day. Everyone knows this. Come on, man. As a fast food chain, you look at what your most popular selling food is, what makes you the most money, and you keep it. Everything else you cut. Starting March the 11th, customers will be able to order the spicy potato soft taco and cheesy fiesta potatoes for the first time since they were excised from the TB menu back in September. But what's more, Beyond Meat is already developing a taco-style meat to be used in a variety of Taco Bell dishes. Sorry, I would like to know what is in the Beyond Meat before I just, shove it down my throat. I need to know what I'm working with. Hey, but that's just me. What do I know? What do I know? In other news, your boy de Blasio is in the news again. Yeah, he's boasting that New York will terminate doing business with the Trump organization. In a display of complete irony and hubris, New York City Mayor de Blasio, single-handedly responsible for turning New York City into a ghost town over the last 12 months, took to Twitter yesterday to boast about the city ending its business relationships with the Trump organization. New York City doesn't do business with insurrectionists, he wrote. We're taking steps to terminate agreements with the Trump organization to operate the Central Park Carousel, Woolman and Lasker skating rinks, and the Ferry Point golf course. De Blasio also took to MSNBC this week, stating on the air, the contracts make very clear. If the leadership of a company is engaged in illegal activity, we have the right to sever the contract. Inciting an insurrection against the U.S. government clearly constitutes criminal activity. But leading an insurrection against the NYPD isn't, huh, Bill? BNN reports that the city believes it's on strong legal ground. With its efforts, they have profited from these contracts. They will profit no longer, de Blasio said. A legal challenge from the Trump organization is all but assured. Currently, the Trump organization has more than $17 million in contracts with the city, including the famous Woolman skating rink, which generated $9.4 million in income. The administration will be notifying the Trump organization that the city will cancel its agreements to operate the Central Park Carousel, Woolman and Lasker skating rinks, and the Ferry Point golf course in accordance. The contracts for the carousel and the ice rinks will end in coming weeks. The process for terminating the Ferry Point golf course is more detailed and is expected to take months, de Blasio said in a statement. The city of New York is the latest in the mob to cancel President Trump after last week's Capitol Hill protests. That list now includes Lehigh University, Deutsche Bank, the PGA of America, Cushman and Wakefield Real Estate Services, and corporations like Google, Facebook, and Shopify. Meanwhile, New York City Mayor de Blasio was worrying about who to cancel next. New York City saw a surge in homicides in 2020, helped along by the mayor's lack of support for policing. New York City recorded 447 homicides for the year as of Tuesday, a 41% increase over 2019 and the largest tally since 2011, New York Magazine wrote back in December. Again, focusing on the wrong things. Instead of focusing on politics, he should be focusing on how to bring his city back. We know that people are leaving New York City in droves. New York City is hurting financially, and yet you want to cancel contracts worth millions of dollars in a struggling city. Really? Does that make financial sense to you? No, it doesn't. Okay? You don't cut your nose off to spite your face. That's foolishness. But do you see also, you guys, the hypocrisy here? All last year, when Black Lives Matter and Antifa was tearing up U.S. cities from coast to coast, no one said anything. No one did anything. No one called for the arrest and prosecution of all those protesters who murdered people and destroyed private property. Oh no, there's nothing wrong with that. They didn't see anything happen. They didn't see anything wrong with that. They didn't call that insurrection. Really? You don't call burning down cities insurrection? You don't call killing innocent civilians insurrection? You don't call putting mom and pop businesses out of business permanently insurrection? Really? You don't call people calling for the death of a sitting president an insurrection? When movie stars and actors and rappers and musicians were saying death to Trump in a public forum, that was an insurrection? What do you think would have happened if Obama was in office when all these things were happening? What do you think they would have said then? That is the hypocrisy, ladies and gentlemen. You didn't see no arrests. You don't see nobody being put down. You don't see them issuing a warrant for the arrest of Bill and Melinda Gates Foundation, the George Soros Foundation, or any of those foundations that funded the Black Lives Matter insurrection or the Antifa insurrection. You ain't see nobody going after them people. But it's okay to go after a sitting president. And they felt comfortable and they felt safe doing and saying these things. There's a reason for that. It's because they're all being protected. By whom is the question? By whom? People need to wake up, man. And here's another I told you so moment. I warned you guys back in 2016. If you have not already done so, you need to go here on YouTube and watch my 2 documentaries. The first one is There Is No Collapse. You need to watch that one because everything I said in that documentary is coming to pass and has come to pass. Followed by the Fed and the central banks versus the blockchain and Bitcoin. Everything I warned you about in 2016 regarding Bitcoin and the blockchain has come to pass and is coming to pass. You need to watch it if you have not already done so. And I will end it with this. The European Central Bank's Kathleen Lagarde calls for global regulation of the reprehensible Bitcoin. President of the European Central Bank, Christine Lagarde, has called for global regulations on Bitcoin, labeling the cryptocurrency reprehensible. Lagarde made the comments during the Reuters Next conference earlier today, during which she asserted that Bitcoin was not a currency. When you look at the most recent developments upward and now the recent downward trend, for those who have assumed that it may turn into a currency, terribly sorry, but this is an asset and it is a highly speculative asset, she said. Again, she's talking out of both sides of her neck. You said it's not a currency, but then you say it's an asset. So you're admitting that it has value. Interesting. The former head of the IMF, who was previously found guilty of financial negligence by a French court over a $403 million arbitration deal in favor of businessman Bernard Tapie, went on to accuse Bitcoin of being heavily embroiled in criminal activity. There's some irony for you. A criminal calling Bitcoin a criminal. Really? So we should listen to a criminal label another entity a criminal? Bitcoin has conducted some funny business and some interesting and totally reprehensible money laundering activity, said Lagarde. Do you have any evidence admissible in a court of law to back those claims, Miss Lagarde? The ECB head went on to call for Bitcoin to be regulated by financial authorities. There has to be regulation. This has to be applied and agreed upon at a global level, because if there is an escape, that escape will be used, she said. Globalists and technocrats have long begrudged Bitcoin because it is decentralized and therefore impossible to come under the control of centralized financial institutions. The cryptocurrency has also provided a refuge for dissidents who have been deplatformed by regular financial services and institutions over their politics. Bitcoin recently soared to a record high above $41,000, but has since fallen back to around $35. Now it's currently trading at $39,000. After the cryptocurrency previously hit a record high above $17,000 at the end of 2017, it then sank back down to around $3,000, emphasizing the wild volatility of the asset. However, numerous analysts are predicting that growing debt, record money printing, and hyperinflation could see Bitcoin soar into the hundreds of thousands over the next year, which is true. See, they want to control everything. They hate Bitcoin because they cannot control it. And the reason why they want to have control it, because they don't want you having any exits. They want you to go down with the ship. They know that hyperinflation is coming. You don't think so? Here's your proof. The World Bank sees quiet financial crisis brewing as the planned scamdemic lingers. In an interview Wednesday morning with Bloomberg, World Bank chief economist Carmen Reinhart bluntly said, "Don't confuse the rebound with a recovery." Reinhart said a rebound this year still leaves per capita income below where it was before the COVID crisis. Calling it a recovery is misleading, she says. She went on to say that 1 year later, the world is still facing record infection rates, adding that the longer the virus goes on, the more disruption in terms of jobs, in terms of closures of businesses, that can really get back to anything resembling normality. That I disagree with strongly. You believe that you can't continue things and get back to normality because you said so. No one made you close down the economy, the global economy. That was your response. That was your overreaction. Don't blame that on a virus that has a 98% recovery rate. Reinhart said she is very concerned The longer this goes on, the more strain in balance sheets of individuals, households, firms, and countries. It's a cumulative toll that I think will create classic balance sheet problems. Blaming the resurgence of the planned scamdemic, she said economic growth of 2021 is being marked downward. She also said there's been a problem that has been delayed but not avoided. That is the household's ability to repay their mortgage and service any other debt. During the virus scam pandemic, financial institutions worldwide agreed to grace periods for businesses and households so they don't have to repay their debts. Well, isn't that what you do with the planned scamdemic? Reinhardt then asked the trillion-dollar question, what happens when those grace periods come to an end? To sum it up, Reinhardt suggests the world faces a financial crisis if the planned scamdemic continues to ravage the global economy. Or should we say, if the stupid, foolish, nonsensical responses to the planned scamdemic continues, the global economy is doomed. Doomed. This was a similar message that SoftBank CEO Masa Son warned about a couple of months ago of the impending disaster that could tank global markets. More recently, GMO's co-founder Jeremy Grantham's latest research note suggested this bubble will burst in due time, no matter how hard the Fed tries to support it, with consequent damaging effects on the economy and on portfolios. Make no mistake, for the majority of the investors today, this could very well be the most important event of your investing lives. And with 10-year nominal yields surging in record days, maybe the bursting of the bubble is much closer than we think. And this is why, ladies and gentlemen, I keep saying it till I'm blue in the face. You need the pulse waves. You're not going to make it without the pulse waves. Straight up. You're not going to make it. You're just not. You're just not. You need the pulse waves. Go to pulsewavetrading.com and do what you got to do. Handle your business. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. And I'm out. And peace. Smash that like button.